Welcome to the deep dive. Today we're jumping right into a company that's really been making waves, Palantir, ticker's PLTR. Even if you're not deep into stocks, you've probably heard the name. It's been all over the news, the charts.
Absolutely. Hard to miss.
So our mission here is simple. Cut through that noise. We want to figure out what's really driving Palantir's recent, surge, and what it means for you, especially if you're just trying to get a handle on this stuff.
Exactly. We've got the reports, the analysis. Our job is to distill it, give you a clear, balanced picture.
Balanced is key.
Right. Because there's definitely exciting potential there, but also, complexities. We want to lay out the facts, the upsides, and the potential hurdles.
Okay, let's dive in then. Palantir's stock performance. It's been, pretty incredible lately. What's actually behind this surge? Can you break down those numbers?
Yeah, incredible is the word. It's been quite a ride. Just in the last month, maybe around 10% gain, but zoom out a bit.
Okay.
Year to date, so since January, we're talking a significant 84% jump.
84%.
Wow. And hold on, the past year, it's something like 437% gain.
400. Okay, that's staggering. Quadrupled in a year.
Pretty much. That gives you a sense of the momentum we're seeing.
So what's that mean in terms of market activity? Are lots of people trading it?
Oh, absolutely. Massive interest. Take June 13th, for example. The daily trading volume shot up by 68%.
68% in one day.
Yeah, and the value traded was huge, something like $128 billion. That tells you institutions, individuals, they're all actively involved.
Right, and that pushed it to a new high.
It did. Around June 17th, it hit that all-time high, touching the $136 to $140 range.
An all-time high. So are analysts thinking it could go even higher?
Some definitely are. You hear technical analysts, the ones looking at charts and patterns, they're eyeing maybe $210 as the next sort of ceiling or resistance level.
Resistance level.
Yeah.
It's like a point it struggles to get past.
Exactly. If it breaks through that $210 mark, it often signals more strong upward movement could be coming. But, it needs continued buying interest for that.
Gotcha. Okay, so the numbers are clear, but what's powering the business itself? What are the fundamentals driving this?
Well, the big story is really AI, artificial intelligence, and defense contracts. They've been landing and expanding AI platform deals, especially with the U.S. Department of Defense.
That's the Maven system.
Precisely, the Maven Smart system. News around that contract alone gave the stock a 4% bump. Shows how sensitive the market is to these wins.
And it's not just DoD, right? Are they winning elsewhere?
Yeah, good point. It's broader. They got a $30 million contract with ICE, Immigration and Customs Enforcement, solidifying that government footprint.
Okay.
But also key partnerships in the private sector. Think XAI, TWG Global, using AI for financial services. So they're diversifying.
Right, government and commercial. How's that commercial side looking? Is it growing fast too?
Oh, definitely. Their U.S. commercial revenue up 71% year over year. 71%.
Wow.
And overall commercial, including international, is up 68%. And it's not just one or two big fish.
It's spread out.
Yeah, they've got nearly 600 customers now, over 130 contracts worth more than $1 million, and about 30 over $10 million. So it shows they're scaling, getting their tech into lots of big companies. Real value there.
Okay, so strong growth, clear momentum, big contracts. Sounds pretty compelling, but, there's always another side. What are the potential risks or red flags folks should be aware of here?
Right, that's the crucial next step. And it really comes down to, valuation. The price of the stock compared to the company's actual earnings.
Okay, valuation. You mean like the PE ratio?
Exactly, the price to earnings ratio. Basically, how much are investors paying for each dollar the company earns?
And for Palantir, what's that look like?
But, it's high, very high. That's the red flag for some. The trailing PE, looking back at past earnings, is around 600.
600 compared to what normally?
Well, a typical healthy range might be, 15 to 30 maybe, so 600. Yeah, it means investors are paying a massive premium. And even looking forward, the forward PE, based on estimates, it's still up there, maybe 200, 210. Some reports even say 250 times earnings.
So overheated is the word analysts might use.
That's exactly it. It suggests investors are banking on absolutely explosive future growth, which is great if it happens, but it means there's very little room for error. Any slip-up, and the stock could correct sharply. High risk, potentially high reward.
Makes sense. It's all about future expectations being priced in. Are there other risks besides the financials?
Yes, definitely. Given what Palantir does, Handling large amounts of data, often for governments, there are political and regulatory risks too.
Like scrutiny over data use.
Right. There's been scrutiny, for instance, from lawmakers about their contracts with the previous administration, raising privacy concerns, talk of a mega database.
And that kind of scrutiny, it's not just bad press. It can actually impact the business.
It potentially could, yeah. It might affect future government deals, maybe lead to tighter rules, or even make some potential clients wary. It adds a layer of uncertainty.
Okay. And what about all that trading volume we talked about? Is there a downside to that?
Well, high volume means high interest, which is good. But it also means things can swing quickly. More potential for volatility, sharp ups and downs, especially if short-term traders decide to take profits.
Got it. So incredible growth story, but balanced by these very real valuation and regulatory concerns. How should someone, maybe new to this, sort of process all this? What's the takeaway?
Well, boiling it down, Palantir has undeniable momentum from AI and big contracts. They're innovative, expanding, capturing a lot of excitement.
What?
But the valuation is stretched thin. The price is way ahead of current earnings, suggesting significant risk of a pullback if growth doesn't meet those super high expectations.
So if someone is considering it, are there different ways to approach it based on, say, how long they plan to hold it?
Yeah, the sources suggest a few angles. For the short term, like the next week or two, it's about trying to ride that momentum. But, and this is key, set clear exit points to lock in any profit because of that volatility.
Okay, clear exit points. What about midterm, say a few months?
For the midterm, maybe 1 to 3 months. The thinking is more around divided purchases. Don't go all in at once. Buy in stages to average your price. And keep a very close eye on that valuation and, crucially, watch for new contract news. That's the fuel.
Divided purchases, watch contracts. Got
Right.
it. And long term, 6 months plus.
For the long term, it's similar. Divided entry is still advised. But the key advice there is maybe wait until those big contracts really start showing up in the earnings numbers. And until the valuation perhaps cools off a bit, becomes more, sustainable, waiting for the business reality to catch up more with the stock price hype.
That's really helpful breaking it down by time frame. It does raise that big question, though. How do you personally balance that exciting potential, which Palantir clearly has, against those warnings about the price and the risks? What stands out most to you?
Yeah, that's the core tension, isn't it? For me, it's this clash between the market's huge enthusiasm for anything AI-related right now and, well, the traditional math evaluation. It makes you wonder, are the old rules changing, or is this just classic market exuberance that'll eventually settle down?
A fascinating dynamic to watch.
Definitely. It really underscores that even with the most exciting stories, you need to look carefully at both the dream and the price tag attached to it.
A great point to end on.